Good morning, everybody. Welcome to Monday, a new week. Hope you had a great weekend, and we wish you all the best of luck this week. Many pips to you all. Good morning to Kay, and Stell's back from his 2-month-long holiday.
Good morning, Ryan. Good morning,
Hello.
Stella. Good morning, everybody.
How you doing, Stell?
I am good. Came back yesterday, and it's a lot of things to do, but all good. Yeah, came back relaxed. How are you guys?
Weren't out horse riding like Steve.
No.
He looked really. We'll have to share a photo of that on Face or something. He looked really happy on that horse, and the horse was twice as happy as well.
Yeah. Good to be back, guys.
Yeah. Okay, well, let's get stuck straight into it. Not a lot of data or news out, but a few key points just to show up here. China, as we spoke about last week, they cut their LPR rates, another set of loan rates there. They went a bit different to what might have been expected. So there's two rates in question here, the 1 year and the 5 year. They cut the 5 year by 5 basis points to 3.65%. It was largely expected they'll follow what they did in the, I think it was the NPR, where they cut by 10 basis points. But on the 5 year, they cut by 15 basis points to 4.3% from 4.45%, where many were expecting a 10 pip cut there. What that can insinuate is they're looking to lower the cost for longer term loans rather than affect anything more short term. Get people, borrowing at the longer term, bring the rate down, make it a bit more affordable to take out those longer term loans. Or it could just be China and the PBOC not wanting to, let's say, kowtow to market expectations of what they're going to do, which, as I say, the market was expecting 10 pip cuts in both rates, and they maybe decided just to be a bit different, just to keep the theme in play that they're in control of everything, irrespective of what everyone else thinks. What else has been coming out of China, and there's been a lot of headlines I've seen flowing through the Twitter sphere this morning, is about the droughts in China and the heat wave ongoing in China. The Yangtze River drying up, reservoirs drying up. There's been a lot of that news there, and it's looking pretty grim. Now, of course, China tries to put a bit of a brave face on it. There was a tweet out from one of the state news agencies, or close state news agencies, highlighting the drought problems, but also highlighting how they're managing it by raising reservoir levels along the Yangtze River, where they have those big dams now in place, and how they will likely have a bumper crop. One of the farmers was saying, going to have a bumper crop this year. So putting their own little spin on it, but if you read the rest of the news, it's not looking that good over there. And this is something that a lot of Europe has been dealing with as well. Droughts, rivers drying up. Obviously, we heard stories all last week about the Rhine levels as well. So again, a situation that's going to hamper things like food, and it's going to keep inflationary pressures in there. That being the case. Right, moving on to some other news. Now, we've had Gazprom out. I think it was late on Friday this came out, announcing they're going to shut down Nord Stream for maintenance at the end of August, 31st to the 2nd of September. So a 3-day period there. Now, a lot of the press is saying this was an unscheduled maintenance call, although it is applicable under the maintenance contracts that Gazprom run. They can do this at any time. So that is Nord Stream going to be shut down for 3 days in total, and then Gazprom have said it will come back to current levels that it is now. Now, one thing I'm not sure about, and I don't know if Kay or Stel can remember this, when we all had that turbine issue stuff going on previously, when we had the prior maintenance period, some of the fixes or the turbines that Siemens were working on weren't for that prior maintenance period. It was for a later maintenance period, and I'm not sure if it's this August one or it's another one in September. So I think the news might be a bit convoluted on that. Do you guys remember those stories coming out?
I don't recall the exact dates, but I know that there's in total 5 or 6 turbines to be maintained. and some of them were on their way to Canada. Some of them were there because apparently it's in Canada. They are maintained. The total time span would have been 2 years or so. So I don't know if this is next one, a planned one. But looking at the reaction of European-based energy prices, it doesn't seem to have been part of long-standing plans.
No, I'll have to look back and dig that up, but I'm sure one of these turbines or parts that were in Canada waiting to be shipped over wasn't for the last maintenance period. It was for a future one. I can't recall, but anyway, it doesn't help the market either way. The market reads the headlines and reacts, so that's going to bring more angst around that period. Calls whether whether they're going to start up again, or is Gazprom going to pull the plug, etc., etc. Obviously, Europe's still trying to fill up their reserves for the winter. So either way, it's more geopolitical news, market news in the mix for that one there. So moving on from that in itself, the UK is going from strike to strike to strike. We've just come off a weekend of rail strikes. We're now going into an 8-day port strike. We've heard that barristers are going on strike. We've still got other service workers on strike, postal workers on strike, air staff strikes. You name it, everyone's striking. But this is another one just coming on top now, barristers and this 8-day strike for port workers, which is obviously, again, going to hamper supply chains. And by consequence, that's going to keep inflation coming through the pipe. And City are out with a report in the FT this morning. They're predicting 18% inflation coming for the beginning of next year. 18.6% is the number they're calling for January. A lot of that is based on the upcoming energy price cap rises which are coming, which the current cap is at 1,971. They expect it to go to over 4,500 in January and near enough 6,000 in April, and thus that's going to be driving inflation much higher in the UK. It seems that the UK is going to outstrip other countries for these energy rises. So I wouldn't be surprised to see inflation running much, much hotter in the UK than perhaps we see in the rest of Europe, although there are other fundamental issues in Europe, obviously to do with the Ukraine situation, that are going to add some equally big measures to inflation over there. But I do expect the UK to probably run a bit hotter than the rest of Europe. And of course, this is the sort of inflation that the Bank of England has got absolutely no hope of containing, whatever they do with rates. So it's going to be a case of suck it and see. Although the Bank of England will still be hiking, as we know. In other news, keeping it to rates, and probably the main theme that we're going to be talking about for most of the week is surrounding expectations for Jackson Hole coming up and the Fed, Powell, and what the latest news we're going to get on Fed intentions. Now, there was a Reuters poll out in which 76 of 94 economists think the Fed is only going to hike by 50 at the September meeting. All the rest, the other 18, were going for 75, so no one was going less than a 50 pip hike. So that's quite a lot. That's quite a big number looking at 50s, when we've heard from several Fed members that 75s are the likely outcome. So it's strange to hear that there's still a lot in the market who are pushing against the Fed, and we've had that previously. Speaking about it last week, a lot of the market took the Fed minutes, picked up on that line about rates would have to start, or rate hikes would have to start being less further down the line, which, you know, that's not exactly a Nostradamus prediction there. We know that they can't keep hiking at 75 pips, but the market, some in the market still keep fighting against the Fed narrative that they're going to keep hiking, even if they bring rate hikes lower and have to hike longer. So this is what I say. This is going to build into the thing we're going to get this week. I'm still waiting to get the full schedule from Jackson Hole. They, if memory serves, they do release it quite late, just so we know what speakers are speaking when. how many will get on the Friday while the market's open, and who's going to be speaking over the weekend, obviously when markets are shut. We do have Powell's opening remarks on Friday. Whether that's anything of note or whether it's just a bit of fluff to kick the conference off, we'll have to wait and see. I'm not sure if that speech gets aired early or it just comes in a headline dump before it starts. So really what I think is going to happen this week is that we're going to get all this to and fro. People in the market questioning whether they're going to come down to 50s, whether 75s are on the table. And I think we're going to see a lot of jockeying around in the dollar and yields based on that until we get some clarity from the Fed. So before we get into the prices, just want to have a quick look at some of the bits and pieces coming out this week on the data front. Nothing of note today. Tomorrow we start getting the PMIs, the flash numbers, starting in Australia, Asia, Japan, through to Europe and the UK, and we get the US as well. Eurozone consumer confidence on Tuesday as well, the flash number for that. That should be a laugh. New home sales tomorrow as well. Keep an eye on that one for the housing market and particularly prices. We saw a little dip in prices on existing sales last week. We need to see if new home sales are going to start feeling the pinch from higher rates. Wednesday we got durable goods orders. Again, going to see how a lot of the consumer is doing. You know, we got the retail sales numbers last week, which showed the consumer is sort of holding up a little bit. This will put us at the producer level. So some of the durable goods is things like washing machines and white goods and other bits and pieces, as well as some big ticket items, defence and aircraft. Pending home sales there as well. We get Kiwi retail sales. Going into Thursday, some final GDP numbers from Germany. I think there'll be finals now for Q2. It could be in a revision. ECB minutes are out. I'm not sure if we're going to get much out of those, though. It could be a little bit FOMC-like, where the market picks up some key words or comments in there and makes a big deal out of them. The revision of US GDP we get on Thursday, and then we get one of the other regional manufacturing numbers from Kansas City. We'll get to see what's happening in the manufacturing sector. We had the Empire State last week, which was disastrous, and then the Philly Fed wasn't too bad, so it's a bit messy at the moment. And then into Friday, a few more confidence numbers, personal income and outlays from the US, some inventory data as well there, and US consumer sentiment, which could be fairly big. I think that might be out after Powell. I think Powell is scheduled for 2 o'clock UK time, so it's about 1300 GMT, but I'll double check that. I'm not sure if Kay knows.
Yeah, exactly.
So that's it. Is what, sorry?
Yeah, Powell is up at 1300 GMT, Michigan at 1400, and just before we've got some PCE price index, personal income and stuff. Just before he talks, I think it's a live introduction, but it should be his main intervention on Jackson Hole, actually, from Powell. And the other half certainty is that Schnabel will be talking on the German member of the ECB will be talking on Saturday, and but Lagarde is not scheduled to go to Jackson Hole this time. But for the rest, sorry?
She's not doing a virtual appearance or anything like that?
I've read somewhere that she's not supposed to go to Jackson Hole. Now, is it? Are there other plans? I'm not sure, but it could be a bit watered down, because I haven't seen anything in the Japanese press either regarding Corona. It's funny, because usually when there's an in-person meeting, he should be there, because there's always free drinks. So
yeah, as I say, it's a bit. They never do announce a schedule until really late into or really close to the actual thing. So I don't know what the reason is for that. But usually what happens is, just to give an idea, well, certainly pre-COVID times, is that a lot of the press, the Bloombergs and CNNs, set up booths outside of Jackson Hole, and they have these let's call them off-piste interviews with some of the central bankers alongside whatever happens in the symposium itself, and that can be where we get more of the key comments rather than at the official appearances. But as I say, we'll know what's happening later in the week with that, and we'll keep an eye on things there. Still, anything you're looking at straight back into markets, or you're easing yourself in?
I am trying to ease myself in. I mean, I was away for a week, and during that week, the dollar did really well. The problem, we obviously have Jackson Hole coming up, and that's going to be driving pretty much everything. The problem that we have, I mean, you talked about the UK government, the Bank of England hiking, trying to bring inflation down, which is now in double digits. And while the economy is starting to tank, and they have to keep hiking, that's a problem that these central banks have put themselves into by waiting so long to start hiking. Now they know they're gonna crash their economies. I mean, it's like having breaking your fingernail and it's hurting, and then you go, all right, I'm gonna chop my arm off to make sure that goes away. They're doing something which they know is really bad for the economy. They know it, but they now have no choice. That's why they're kind of reluctant, and we've always talked about that they don't want to hike, but they kind of have to now. And if they weren't so late, it would have been a lot better, I think. But in any case, the dollar is king at the moment, and it's up to Powell to bring it back down. One thing's for sure is that the world cannot afford to have a strong dollar for too long. This has been the case over and over and over the past decades. And, the world economy suffers, and, especially emerging markets with strong dollar, it just cannot be. So, where does it turn? That's the trillion-dollar question. Jackson Hole could be a starting point for that, although I don't see why Powell should be dovish yet. After all, inflation is still high. Yes, the last print was a little bit lower than expected. Is it the beginning of a slowdown? We don't know. We don't know. It's one print. You can't make a trend from one print. So as far as they're concerned, they can keep going. Risk assets are dropping, so stocks are dropping a little bit. But again, it's relatively controlled. So there's no panic yet. So I don't know what to make of these markets. It's a very difficult one. By the way, I had remember that silver long I had from 1880. I had taken
1980.
Sorry,
1880.
1880. I took a quarter off at 2040. I put it back on at the 1960. I actually had moved my stop up to 1895 for everything, so I got taken out and I'm flat again. So at least I made 8% over for a quarter of the position. It's okay. But I'm gonna be going in again, but not just yet. So I'm watching for more price action.
Yeah, it just shows the indecision you got in markets, isn't it? You think you're getting it going your way for 5 minutes, and then the next minute it turns right around on you. And I think that's been a big theme in markets of late. Generally, you think you're going one way, and then the next day it does a 180 on you, and then spends 2 days.
The moral of the story is take profits when you can. And in my case, I should have taken more profits. But anyway, shoulda, coulda, woulda. It's still a positive trade is a positive trade, so we move on to the next one.
Yeah, exactly. And just quickly, so what I'm expecting in simple terms from Jackson Hole is that we've got the Fed on a current path. Some in the market think the Fed's going to change from that path at some point. So this Jackson Hole, Powell has the potential to either keep the Fed as they're going or to inject a little bit of, I won't call it dovishness, but less hawkish comments. That'll give some of these market doves the ammunition to push their side of the trade, which will mean lower yields, lower dollar probably, and we'll probably see stocks rising on that. As I say, on the flip side, if Powell keeps the path in play, we're going to get 75 pips in set. They're going to do whatever it takes type commentary. Then I can see yields bouncing higher and certainly the dollar moving higher as well. So that's my general outcome from Jackson Hole, just to get that out on the table. So looking at some of the prices, a bit of a messy morning when I woke up. When I woke up, dollar yen had just come off the highs. Yen pairs in general were looking well bid, and that was keeping the majors propped up. And then as the mornings progressed, or in between when I got out of bed and came downstairs and finished sorting the kids out, it's gone the other way, and the yen pairs have come off. And so we've seen euro dollar come down and testing parity. And while that's a bit on the dollar, I think still a lot of it is on the crosses, and still a lot of yen movement in here. So it's not wholesale dollar moving, because otherwise we'd see dollar yen higher over that. But we've had a test of parity. I know Kay's got some levels down under here as well. My levels that I'm looking at is the prior break low, which might be a bit hard for some of you guys to see on the chart there, which was 99.52. That came in just above the 2015-2016 trend line lows. You can see there. That trend line was around 99.40s when we hit those 52 lows. Today it's around 33-ish. So that's going to be one of the areas I'm going to be looking at. And then I know Kay's obviously got some bigger levels underneath down towards 99. Pretty much for me, for the upside, firstly, we've got to decide what we're doing here at parity. We've had a little sniff under. It hasn't held. We've got back above. Now it's trying to hold it again. A bit indecisive. I am small long at 02. I couldn't resist trading the level, but it's nothing big. Given how the price has reacted for the last couple of weeks, I'm fighting a very strong trend, and if I'm going to do that, I'm not going to do it with a lot of money. I did take a cut at 14s, and I'm just going to see what happens to the rest of it. But if we're to turn around, we need to get above initially this late days high, or late Friday, early weeks high, around about 45, 50s, and then the 70 areas before we even look to turn around some of the moves that we've seen over the last week or so. So here we just need to know what's going to happen at its parity. Are we going to hold it and make it a solid level? Are we going to get below? My key will be if we get below, and if we start to find resistance against this level after a breakthrough, say we have another test of 90s, 85s, 80s, and we bounce and we can't get back above it, that's going to be a potential signal to maybe get into a short, because we would have had potential confirmation of the break. And that's something I'm going to be looking at, because if we do hold below here, if we do crack this level, we could be heading much, much lower. Kay, what have you got on this one just below?
Yeah, still, I've got this line, as you say, which comes in where the last time we went down there, the 2015-16 line that you showed, which is now around the 99.30s, and as I showed already, I'll show it a little later. This. Do
you want to grab it now?
Yeah, sure, man, no problem at all. I'll do my my little run through, and then we'll see, and then I'll give it back to you later. Yeah. All right, so that's the line that Ryan was showing, and I just as a reminder, really, this is the 99, the figure. People who have been listening to the show know why I'm watching this. Also for a psychological reason, I think this is really where the battle for parity is won or lost. For the euro dollar. We've seen different and very interesting, by the way, patterns by the people in our room, calling for 96, 97s, and I was reading over the weekend that's roughly where one Dutch bank, who is very famous for putting out all their strategic pieces for free, which is nice for everybody. And also calling for this 95, 96, 97 zone on the euro dollar ultimately. Right now, I'm regularly playing it from the short side still. I think the euro is still in big trouble. but something more longer term, I don't have really on the books right now. I have taken the move lower in parts from 103.5, which we were showing before, but right here and now I'm a little undecided on the euro dollar, also into Jackson Hole, the market, even though I think nothing will change in Jackson Hole this time. I don't think there's a reason for Powell, or enough reason to signal a change yet. Yes, we've had this one-time lower CPI print, and PPI, but then the data which came out afterwards were rather mixed. So, in my opinion, we are not going to hear much from Powell. And Powell, I must say, has taken the habit, and is doing it pretty well, of walking the fine line, trying to keep the market expectations as clear, or as let's say, without disruption as possible, and he's been doing a relatively okay job. My concern is rather the after Jackson Hole. Okay, the week after we got the labor report on the 2nd of September, but to talk about the medium term, of course, Jackson Hole, if it doesn't give anything, because the market is desperately looking for a pivot, as we were saying, and they've all been eating dust, and the dollar has got stronger. Something that we mostly saw happening because the market was asking for too much too soon. But I think we're going to see moves, and the thing on Jackson Hole could be that he doesn't say anything, but he only has to say data dependent, and the market will sell dollars because they think the Fed will signal a pivot again already, and perhaps, or maybe, and I don't think it's that at all. But anyway, euro still very heavy, but watch if ever we get down there and it's a percent away, which we have seen over a couple of sessions. If it ever gets down to 99, pay attention to what's happening in the euro. Short term, I think now for the euro we have to start to get back above 10050 to get to a bit more neutral and have a chance of only seeing the 101.10 again. So for the time being, still very, very heavy, but now it's showing a little bit of signs to correct, but it's global dollar correcting a bit because Aussie Kiwi are trading higher. Cable, I'm going to leave it alone because I really don't see much below this 117.60. Yes, there is this those low closes around 116.75 somewhere, half 3/4, but if this starts to break below 117.5, what's going to stop it before 115 is really my question, especially that the commentators, the analysts calling for higher and higher inflation, Bank of England being more and more behind the curve, UK situation getting more and more dire. I don't know if the market has its firm grip on it. I don't see what's going to stop sterling right now, let alone reverse it. Perhaps we could like stall here for a bit and see what happens into Jackson Hole. The market will want to manage its dollar positions likely a little bit into it, whether it's in whether you're having a really good position or less brilliant position. You might want to keep your risk under control going into Jackson Hole, whatever happens. On the dollar yen, interesting today. I showed this morning. Sorry, it's looking a little bit spaghetti chart, but basically it's this channel flag, or however you may call it, when it broke, and this line came in around 137.40. The shorter term rebound line came also in there, and it's the 78.6 of the move back down from 139 to 130. And we tagged it. We stopped right there in the dollar yen. 137.5 is important for me for the continuation or not of this move. Again, over the week, we haven't heard from Kuroda-san this weekend in regards to the higher CPI print, and I don't know whether he's going to be at Jackson Hole or not, but keep your ears open in case he says something. So this is going to be the immediate important level, in my opinion. Small level here around 136.60, but that's very close. I think the first decent support comes in around 136. The figure on the dollar yen. We could be in this channel building, in which case, and we have seen that dollar yen can be very volatile, in which case we might actually start to correct deeper. We have to really look at how volatile it gets into Jackson Hole, but we can't really rule much out in yen pairs for the time being, seeing the volatility that we had, especially if we get some MOF or Bank of Japan comments again, who likely will feel uncomfortable with the speed of this move, which we've seen from the bottom of the cloud the other day to ramping higher in just literally less than a week. So perhaps the MOF is not really going to like it. Let's have a quick look where the cloud lies for now. As you can see, it's around 136.30. Yeah, I mean, getting back into it may see a few people start to take profits or rush for the exit on week longs. Keep above. It should keep the Japanese FX crowd relatively confident. So watch out for 136.30 on the day. All right, then moving over to the next one. Let's have a look at the antipodians, because they are putting in some sort of a rebound right here and now, together with the rest of the dollar. So the Aussie dollar, last week we saw a pretty decent dollar buying in the end of the week fixings, and people in the room know that I finally tried to catch a knife here. I was looking at this one. I was looking at this support as well, the 61.8 of this move higher, and I decided to buy a few already. Let some go this morning just to make it a free trade if ever it breaks below here. And now it's doing a bit better, back above 69. But I think the first one here that we'll have to look at for strength or continued weakness is around 69.40 on the day, 40.45. If it gets back above there, then we could see some fresh air in the Aussie, and perhaps have a move back up to 70. Will it happen today or in the next couple of sessions? There's not a lot out on the docket in Australia really this week, so it's more going to be trade dollar expectations and trade what's going on in China. Although it's been rather a dollar move than a China-linked move, in my opinion, because we can find it back on the crosses where actually Aussie yen, Euro Aussie yen is still trading higher, Euro Aussie is lower. So there's not really a lot I personally can take from the Chinese situation filtering through on the Aussie. It's really dollars, and then look what the commodity sphere is doing. On the Kiwi, well, it's always going to be somewhere a similar kind of pattern than on the Aussie, but we have this one is a pretty cool channel. When it broke, we had a retest, never closed back above the channel trend line, and we saw a fierce move back lower. We are now trying to get back above this traffic zone, and that's around 61.80, 80.85. I know somebody had a trend line here as well, which we are starting to get back above. So it might be a bit positive if the dollar is not strengthening too much further from here. One interesting another one that I want to show. So there's a couple of I still don't like trading dollar Canada, to be perfectly honest, because of its proximity to the US and not really clear situation in the oil market. It did rally with the rest of the dollar pairs. I do think we are coming into a bit of a resistance zone, which is spanning really over the next 50 points from 130.30 up to 130.80. I might start to have a look at it if the rest of the dollar world decides to turn around, but I'd rather stay out of this and just watch the ranges for now. I'm a bit short still. I went out early on the Friday, but then I sold it again. This Euro Canada. I still think the euro is heavy, and Canadian dollar might be benefiting from its proximity to the US, where the American bloc is doing better than the rest of the world for now. So I'm back a little short. Monitoring this 130, 25, 35 for a starter, and then this low here on around 129.60, 65 double bottom. I will likely take some more off if we see it down there. On the more longer term, as I was showing the other day, it is possible that if we really start to break and hold below this 129, the 129.60 is here as well, right? If we really start to break below, why not have a possible target somewhere in the 127s? The only thing, for the longer term, we know where the levels are. They still haven't changed. But in the short term, I think if we start to get back above 131 and a quarter, and then especially above 132, 15, 25 for the medium term, then I think the bottom may be in. We are in this range, but it's a weak, still a weak range in my opinion, due to the heaviness of the euro. Euro Aussie ditto. I sold it again on Friday here. Around 146.20, trading off those two trend lines and this confluence here. Trying to get a bit short in front. Took about half of ahead of this inside this zone here. And see where this can lead us, and also based on basically euro weakness, and for as long as the rest of the economic data really don't fall out of bed, if ever really the global economy, and it's a risk, and I know China is slowing, and it is a risk, and there's problems in Europe. Do watch those commodity and the emerging markets, because they could all of a sudden turn around. And if the confidence in the global economy really goes away, but for the time being, it's more a case of actually also carry trades and the euro heaviness, and looking at what's happening in the commodity sphere. Quick look on the metals. Gold, I'm staying out. I don't really like it. We need to get back above 17, 47, 48, but especially, in my opinion, back through this 65, 75 zone to get more constructive on gold. In the meantime, it's trading relatively heavily, and it will likely follow dollar moves and yields from here. So trade yields, trade dollars. Watch this 22, 20, 23, 28 really, 22, 28 zone on gold. If it goes below, we might have a little washout ahead of Jackson Hole, and then perhaps rebound into the end of the week. But I'm very neutral on this one. Silver, I've basically done relatively similar as Stelios. People know I bought it. I was pretty fortunate to get it somewhere here on the second try around. I built up a little bit here. Also sold up out above those 20s. I was lucky to even get 2070 for some of mine. Tried it again from 1980 down to 1940. Those little legs in, and then I gave up at 1928, as people know in the room. And today I'm trying this one just for the intraday. If it doesn't work, I'm out sub 1880, 75, 80. If it does work, I might start to fold it, or at least part of it, back into my longer term position. I kind of like these levels under 19, but we need to be careful, and we need to stay flexible with any positions right now into Jackson Hole, of course. Look on the emerging markets, if people are interested. Dollar mix 2023, bit of a zone. We had a spike through, stop loss run on Friday, and now we are trading in that zone. Yeah, just 2018 right now. So we are in. I need to show you something else afterwards. So we are in this little bit of a resistance area. If we start to break above 2035-ish, I wouldn't like to be really short. I mean, there's a lot of traffic here, but why not pull higher, depending on what's happening in the economic data. The bigger support, as I highlighted, okay, it's around the prior lows, and then this 75-80 zone is going to be important for the dollar mix. But the one that I'm in, as people know, is Euro mix. We had a retest, a little bit like the dollar mix retest, small break of this red line, which comes in from 2017, but we are relatively comfortably trading back below, so we're still on the way for a test, in my opinion, at least for the 2020 lows around 2004, and why not getting those where the red line started from, those levels in 2017 back around 1965. That's what I'm aiming for, at least with my short. And in the meantime, it's a pretty cool carry trade, seeing the interest rate differentials. Yeah, I told you I wanted to show another couple of things. So these are really the last two things I want to show. Have a look at this. This is the Aussie yen, and I'm going to show the Kiwi, and even well, actually no, this was a good level, but it's nah, get it away. Triangle trading in the medium term. We had several tryouts, and we had a tryout last week as well around the top, failed. Then we went lower. People know that I bought it somewhere around here, but it was through the legs in dollar yen and Aussie dollar. We tried it. We tried to get close again during the Tokyo trading hours today, but failed to get up there. So I'm really watching this big triangle formation with the intermediate support zone 93.0525, and similar is going on in the Kiwi yen, this triangle. And again here, several tryouts to break, which are this is 1, 2, 3, 4, 5 tryouts to no 1, 2, 3, 4 tryouts to try and go and tackle those highs, and we are seemingly fading a little bit. So I would be a bit careful on those yen pairs. For the time being, still some support, 84, 35, 55. I traded it off there last week as well, but took it all off a bit early. But okay, I mean, it's now relatively trading flatlining. But watch this big triangle. And with that, Ryan, back over to you.
Thank you very much, mate. Quick question. I'll throw up the S&P chart quickly. Do you reckon we're over the OPEX hump now? Do you reckon that was part of the cause of the run-up last week, looking at the price action since then?
Yeah, I have the impression.
Still, I don't want to put any pressure on you first day back. I'm sure you need to get back into the run. But yeah, we had a bit of fun and games last week. So, but feel free to air your thoughts as well.
Yeah, I'm here, but I don't have. Sorry, I muted by accident. I'm here, but I don't have anything constructive to say yet. I'm still getting into
back into it. Yeah, I know the people, mate. Yeah. Okay. What do you reckon?
Yeah, I've got a missed opportunity feeling because I waited too long. I was trying to sell around 43, 40, 60 and didn't, and then got a bit busy on my euro crosses and didn't sell it through 42.5. But I think this may have been it, especially as I've been already repeating that I think the once September starts and QT doubles, if we don't get any really dovish tone from Powell, that it might be a drag on equity markets, and I'd love to see it back now or to 4250, 4300, and I'll try to short it up there. But I have a bit of a missed opportunity feeling on this one.
Yeah, it's. I mean, it seems technically it seems to be playing nice. I mean, it's mainly for me. It's playing around the big figures. So we had the messing around up at 43s. You know, then we had the fake break above. Then immediately after, held around 43s. Then it's had the breakdown, broke through 42s. You know, big level there. It had the support. Then it broke. That's likely to be the support area. Next one, we got some minor traffic through the 41s, but it's not until we get down to the low 41s, 10, 15 odd, that the support is going to come in again. So it's big figuritis, if you like. That's the sort of areas I'll stick to my main level. Like you, I think it's a potential missed opportunity. I did short it into 43 before we got the break, and then went with a long reverse, and that got mugged off, but didn't re-short it again. Yeah, we obviously had the OPEX on Friday, which can inject a bit of indecision into markets or extracurricular movements, if you like. So we need to see what happens this week regarding stocks and how they're going to feature back into whatever happens at Jackson Hole as well. I don't have much to add to that. Bright and breezy on a Monday morning. I myself, trading wise, I'm still in the frame of mind. I'm not looking to get anything into anything, particularly long term, unless I get some really choosy levels. So I'm just in snipe mode. As I said, I've sniped euro dollar off the parity this morning for a very small trade. I did a bit of jobbing cable off of 1800 Friday. Dollar CAD as well. Bought the dip after the retail sales data, all those trades were out on Friday evening. Yeah, I'm not really looking to get anything. It's going to be jump on, take profit as quick as possible, 10, 15 pips, and then let the rest ride and see what it wants to do. I certainly haven't got a particular view in general, but I'm going to be getting myself geared up for Jackson Hole. I think we're going to get some really good moves. I think if the market is overly dovish, I think that's where I'm going to want to fade. And if there's any sniff of dovishness, or I keep saying dovishness, I'm getting the markets bug, less hawkishness from Powell, I don't think it'll be sufficient to turn markets right around. So I'll be looking potentially to buy any dip there. But that's it for today. Nice and easy one. Let's ease into the week. And thank you very much for coming. And please remember, if you do want to join us in the room, I'll put a link up to that there. You know, Kay does his round robin, all the charts. You can catch all the analysis and all the trades that get put on. We do have a trades room, chat room, where all trades go into. It's not a signal service, I'll point that out, but it's more for the point of view that if someone's trading something, you get an explanation what they're doing, how they're managing it, what the strategy is, what they're seeing. You know, we can all throw up trades. I've bought this, I've sold that, but without getting the thinking behind it, you don't understand what people are doing. And that for me is the most important part of a chat room, putting the thinking behind a trade. So if you are looking at it, you know exactly what's going on. And for those who are less experienced, you get to learn from the more experienced traders the thinking behind a trade and how they manage it along the way. So if you want to do that, I've put the link up there for you in the chat room. Come and have a look, see what we've got on offer there. I think I put the link in. Yep, there it is. And when will Jackson Hole start? It starts on Friday. 1300 GMT is when Powell will announce or speak his opening remarks for the symposium. As I say, don't know whether that's going to contain anything juicy on monetary policy, or it's just going to be a bit of waffle, and then he's going to appear some other time during the weekend to talk more shop. Anyway, have a great week all. See you tomorrow, and we'll see what's happening in markets then. Have a good week all.
Cheers, Ryan. Bye-bye.
Cheers, guys.